Hi, welcome to the Market Alert, Friday the 11th of September 2015, and yesterday's pre-market session was excellent, as you can see from the charts. The two long trades were my favourite, and by the time we got to 10 o'clock I was already in the trade, stayed in the trade, and 50 points in the one, 120 points in the other trade. And then it was a case of waiting for Carney to make up his mind whether he's going to do anything on interest rates. He failed to do so, and he always will do, by the way. And then we see the market moving lower before the official trading session there. One trade for the long side. We already got the long in the background. The market reversing. It's a sideways channel the market's in at the moment, and one day down, one day up, and there you see another successful trade there as the market then blew out. And very interesting to note on this as well, those of you that have watched the advanced trading videos, this up thrust, the volume is greater than the previous bar, and the range of the previous bar is greater in length than the up thrust that accompanies it as well. You'll also notice that this market went up on fresh air. No green bars, no above average volume, and therefore it drifted straight back down. Managed just to get the 20 points on that, the scalp that is, but failed to actually get that off. Came out at break even on that one as the market started to come back relatively fast, and then we just went into a sideways move, and having been here for about 8 or 9 hours, decided to call it a day. And then you can see through the quiet time there we had a failure. The market then trying to move higher, and again once the market broke back below the major psychological level there of 16,400, the market coming back 100 points. And what's interesting is this market cannot move higher without actually selling off towards the end of the session. And again, now you're seeing the market starting to move up on the overnight market. This is the Asian market, and trying to decide what to do at the moment. It's 10 minutes past 7. And again, who knows what the volatility is going to do today. It is the 14th anniversary today as well of 9/11. Not that that means anything, but it's you just never know. If there's any lunatics out there that are prepared to try and perpetrate something else, who knows? Who knows? We live in a mad world at the moment. So the market sort of sideways. I'll see how it goes this morning, just to see if there's enough volatility. There seems to be not too much of a range. I mean, let's just have a look, see what we've got from the low up to the high. 97 points, only about 100 points. See what happens in the next half an hour or so, because the Germans have just come on board and they've opened, and also we'll have a quick look at China as well, see what's happening there in just a moment. In the daily chart, again, you can see the prices are sideways. No surprise, light on economic news this week. Federal Reserve not in the office. And by the way, if you don't know this, the Federal Reserve have decamped from New York, or intend to, and are bunking up in Chicago. And this is to do with they're worried about a natural disaster happening in New York. And it is official. It's on Reuters, Bloomberg, and wherever you just do a search. So what they believe is going to happen in the future, heavens only knows. But they've moved their operations from New York, where it's been for, well, since the 1940s, out to Chicago, and for reasons they wanted to be on higher ground. Well, I know there is a bit of a problem out in La Palma. The side of the mountain could fall into the sea at any time. So according to the BBC Horizon programme, which is a brilliant documentary actually if you want to have a look, causing a 100-metre plus tsunami in the direction of New York. Now obviously, if any terrorist is privy to this information, who knows? Like I say, we live in a mad world, so whatever their reasons are, and also the potential for earthquakes, but it seems rather odd, I have to say, whatever the reasoning, that they've moved out of New York and to Chicago. But only time will tell and reveal all. So anyway, back to the chart here, to slightly digress there. The market sideways to higher, but the market now having gone up to 16,700 is way back down again. And again, this is classic sideways situation here. Unless the Fed print more money, that will send the market higher. If not, and they increase interest rates on Wednesday next, then you can expect the market to rise initially and then sell off. But again, we have mad people in control of the financial system as well, so we have no idea what they're going to do. On the news front today, what have we got? Not a lot. 3 p.m. prelim UOM consumer sentiment. This is out. This shows a slight drop. If it comes out lower than this, and the usual pattern of a sell-off at the end of the session will prevail, no doubt. So again, we'll just wait and see. In the implied volatility, 2130, this is holding in the highs because the market's up one day, down the next day. So 2130, and it is lower for the last couple of weeks, as that can be seen in the chart there. And then finally, what's happening in Shanghai on the overnight, down at 0.41, 3,184, so way above the 3,000 psychological level at the moment. But it will get interesting from next week. It's, I think, believe that from next week we start to see the action return to these markets, because we have more economic news items. We've got the Federal Reserve's potential to increase interest rates, and everybody will have returned to their desks following the summer vacations as well. And also, don't forget, the deal in Greece hasn't been done yet either. It's not a done deal. The rest of the news, lots of fabulous articles on Zero Hedge from yesterday, really worth a look. And in particular, there's one that, if I can just find it, I am a bit of a gold and silver buff. I started trading 30 years ago, or well, no, just under 30 years ago, the COMEX silver markets. I've always been fascinated by the metals markets as well. And I know that JP Morgan have been manipulating this market for several years, along with the Federal Reserve. Again, these are not idle remarks. These, you just do the research and you'll see. So what we've got now is a situation, without boring you about it, 200 to 1 ratio. That is the number of futures contracts for deliverable silver. Although, as the article says, history tells us that all Ponzi schemes and market interventions fail. And it appears we are on the cusp of a massive failure in the scheme to cover up the truth about the precious metals market. Well, let's have it, because once the silver and gold markets take off, then we can expect to see, just put that back, we can expect to see a lot more volatility in the stock markets, because higher, the reason the prices have been suppressed, very simple, because anybody who's aware of the finance or economics, even if it's basics form, if gold and silver are rising, then there is a lack of faith in the government and their monitoring and administration of the economy and the handling of it. And therefore, once the lid comes off this and you get a move to the, or strong move to the upside, or as the Americans call it now, a melt up, then you can expect to see a lot more volatility in the stock market, and that's fine as well. Right, so on that cheery note, that's it for today. I will see you in Monday's market alert, unless anything happens during the day. Other than that, have a great weekend. Thanks for your support, and also for watching. See you in the next one.